Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call Express. So our futures are pointing to a slightly lower open this morning ahead of the FOMC minutes, which we'll have at 2 p.m. Eastern today, and is, of course, the economic event of the day to watch. So, Scott, first, what are you expecting, you think, today?
Well, when the last time they met was about a month ago, and I think the markets were a bit stronger. The world markets were a bit stronger. So I think the minutes today are going to be a little bit more, I would say, hawkish versus dovish, because at that point it seems like, the uptrends were intact, everything was moving along. So, that rhetoric could be a little bit more leaning that way towards the September, October taper. The question is, has the markets discounted itself enough? Has rates risen enough without the Fed having to do anything? So that's why we're trying to figure out different levels to navigate here through this August thin type environment.
All right, and before we get into some groups that could be affected by the minutes later today, why don't you show us the levels that you'll be watching?
Well, if you look at the S&P, you'll see we're about 3% off the highs, maybe a little less. And we have two different trends that we follow. This is the macro trend that started in November that got tested right here in June after the, the outside day in May. That was about 6%. Then here you had this, head and shoulders top pattern that actually met its measured move. We're below the 50-day. We actually pierced this accelerated trend that we only did one other time. So the question is this a spot to trade against? Okay, I know some people picked some longs yesterday. Yesterday's rally was a little feeble. So I would say watch this, 1645. If we were to break below 1645, at some point today, and especially through the close, we could see a move to the 100-day, which comes in around 1633. If we hold this area and the market likes what it hears as far as accommodative and it's already priced in, then to relieve some pressure, it's going to have to get above this 1658. So overall, we're trying to watch this pivot and we're trying to pick out clues on whether or not you can get involved here or you have to wait for lower prices.
Well, on Fed Day, it's always good to watch the metals, which after a nice move seem to be resting. What areas would you look for metals to hold? Well,
this morning the metals are a little weak, and people are like, oh, is that anticipation of what's happening later? Are they giving us clues? You know what? Fed Day tends to be choppy, and there's a lot of fake outs. So with that said, I know I've been trying to play this for a bounce, and there's been some calculated areas now. It's setting up again. I'm not involved right now. This was your red dog reversal, your blood in the street low, on June 28th. Then this was a nice tactical long when it broke this downtrend, and now it's flagging. So short term, I think traders are going to watch. As long as we stay above this 8-day moving average, above 130.93, it can continue. But on Fed days, it's definitely some volatility there. So, watch this area of support, and then if it were to get above 133.27 and continue higher, this, lower trend, can stay intact versus what was a very harsh downtrend, to start the year. It just shows you that entries and exits matter and things change.
And TBT is also important to watch, could likely move on the FOMC minutes today.
Yes, if they come in and they're a little bit dovish, you could see this overbought situation come in a little bit. We talked yesterday about how it would be nice for a retracement, and it started. So you look here, here is the 8-day moving average in the 21. The TBTs have been a great thing to buy on the 21-day moving average, so right now it's just a bit extended. You did have a down day yesterday. Here is the 8-day, here's the 21-day, but if they come out real hawkish, which they might because the markets were a lot stronger then, all of a sudden, we could get above this 82.76, and then the road continues. We're already north of my targets that were 80 plus.
Well, and banks put in a red dog reversal yesterday, which helped the overall market, so it'll be pretty important today to see if banks can hold.
Yeah, people ask me what is a red dog reversal, and what it is, it's a way to get a calculated entry into a situation that's very oversold or overbought with a plan. So if you look, there were two in the financials. First of all, look back here in November when this trend started after this down move. This was the low here. It was about 15.10, traded below it, engulfed it. This was your buy area, and this is what started the trend. So, fast forward, 9 months later, it just happened again. It doesn't always lead to a major move, but it traded below the prior day low, 1975, put in a low in 1972. That's a 3-cent stop, which wound up being a decent day trade. So now it's probably opening lower a little bit. See if it can hold this area. If it does, that would be healthy for today's activity. If it doesn't, then, who knows? Maybe we'll have to see a move to here. But overall, this is the pivot to trade against. And if it does hold, then, above this area could relieve some pressure.
And there are stocks that are continuing to act well. Facebook, getting closer to 2013 highs, still has room to get there.
Yes, and it still acts well. I know on the upgrade yesterday, they sold it quickly, it regained its footing. I did a video with Deb from the street. Take a look at it there. You know, if you want to look at this chart, still holds in there, still strong. This was your earnings gap. Here was your continuation. Now it's, you know, it's building a nice pennant here above now the 8-day, above the 21-day. Look, you know, the market's pulled back to the 50-day. This stayed in this upper flag, so that's showing me strength. If it were to get above, you know, 39.30, 39.35 and close above there, we shall see, you know, a 40-plus number sooner than later.
Tesla as well, 4 up days. Think we could possibly see some continuation today?
Yeah, it's already, and it's actually up pre-market while the futures are down. And this one gave you that opportunity at the 21-day again, following a strong trend. You look here at Tesla, you know, every time this stock has come to the 21-day moving average, it's pretty much held besides this one spot for a day, and then you had your red dog reversal. Now it's trending higher again, you know, almost right back to where it was prior to earnings, you know, or around that earnings area. So 158.88 is that area. It's opening above this pivot. Hopefully you bought some here on the 21-day. Now you could trim and trail or just trade it on multiple time frames. But this trend is strong, and, you know, it's putting the naysayers, you know, back in their hibernation.
Yes, and Apple also has been acting well. It did take a little bit of a break yesterday, but upgraded this morning. Would you buy the dip there?
I'm looking to. You know, I was pretty much done with it 2 days ago, and I think I even sent out a tweet when it was like 5:10. I'm like, if you're looking for an entry in Apple, I'd wait a little bit. So if you did wait and you were patient, you know, this is a spot that I'm going to be looking to perhaps, you know, nibble right around here. This is 498. 498 this morning would be cool. If not, you have the 8-day moving average that comes in somewhere between 494 and 490. Ultimately, you know, a little digestion will be good after a nice tradable move we've seen since the earnings right around here when it broke this downtrend. So, you know, entries and exits still matter no matter what the stock. So at this point, you know, if you were out of the way into this area, I think there's opportunity.
And we'll be going over all of this and more in the full morning call, so stay with us.